Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Well, we are now in our fifth week of the U.S. and Israeli war in Iran. You know that. Iranian ballistic missiles on Gulf targets have consumed at least 2,400 interceptors, a number approaching those countries' known pre-war stockpiles. And this is something we talk a lot. The Iranian munitions has alarmed U.S. allies around the world as weapon systems and ammunition, Tim, have been pulled to support the campaign against Iran, another angle that we are looking at.
Back with us, Major General Mastin Robison, Academy Security's Geopolitical Intelligence Group member. He joins us remotely. He served over 34 years on active duty in the U.S. Marine Corps, during which time he served in more than 60 countries. General Robison, always good to have you on the program. What is your read on whether this war, now in its second month, its fifth week, is actually nearing an end?
Hey, Carol, Tim, great to be here. I think if you walk the dog back, so what's this all about? The end state has always been a non-nuclear threat, Iran. Then how do you get to that? So you either have to defeat a country, you have to surrender to a country, you have to find an off-ramp. And so I think we're still looking for a negotiated off-ramp. I don't think there's any intent at this point to say we're going to defeat Iran in regard to obliterate the nation or its capabilities. Certainly the desire for a supreme leadership authority transition. But the question is that something that can be done in the immediate future? Is that something that's going to be done down the road based on the Iranian people's reaction?
Can it be done without ground troops, without boots on the ground from the U.S. and Iran?
I don't think it can be done with ground troops. I don't see this being going into Iraq, with 300,000, 500,000 ground troops. I don't see that strategy being what we're pushing for. I see we've positioned sufficient assets to be able to apply additional pressure to create negotiation space to try to get the outcome that we're looking for.
So many questions, so many places to go. What I want to go back, though, is what you talked about, the mission of making sure Iran's nuclear capabilities were reduced, gotten rid of completely. Like, that seems to be the main reason, I guess we all assume, that the U.S. and Israel got into this. At the same time, we're reporting that President Trump's willingness to attack adversaries while rattling allies, threatening to push the world into a new nuclear age, with governments debating whether they must get the bomb. The U.S. is assessing a return to atomic bomb tests. China and Russia are upgrading their arsenals. The Atomic Energy Agency, the International Atomic Energy Agency, warning that more nuclear weapons in more countries will not make the world more secure. Are we on the precipice of a new nuclear age, in your view?
I don't believe we are. I mean, I think actually the bigger immediate thing that we're on the precipice of is trying for this not to become a case where navigation of the sea and the Convention of High Seas and the rules of international law regarding high seas are completely thrown out of the window, which is sort of what's happened at the Straits of Hormuz. You go back to 1958 Convention of the High Seas, or the 1994, UNCLOS, which is in essence, what established the fact that key shipping lanes like this, even though they may be within territorial water, it's illegal to prevent them from being normally used for global commerce. And that's kind of where we are right now. And that has certainly escalated things a bit away from the non-nuclear threat Iran objective to say, but at the same time, we need freedom of navigation globally, or the economy really is going to be massively impacted. That's not new for us. We've been doing that for decades. My first involvement of an issue like that was in the 1980s. Believe it or not, in an obscure location in the Mediterranean where a country is saying, hey, we want to claim this larger body as our own Gulf. and control everything that goes through it. And we said, no. 12 miles is what you get unless you're on a key shipping lane, like Straits of Hormuz, blocking Straits of Gibraltar, etc.
Can the U.S. sufficiently, does the U.S. have the technology or the weaponry or the ability to protect ships without Iran's cooperation through the Strait of Hormuz?
I mean, that is a very loaded question, Tim. And I would say that's not what we're chasing. I think what we're trying to achieve here is enough leverage to where we have negotiation to be able to have Iran say, okay, we're going to stand this down.
But it seems like Iran has a lot of leverage right now with shipping traffic at a standstill.
Well, they have all the leverage,
exactly.
Right, with this?
Well, I don't think they have all of it, but they certainly have more than we wanted to have, which is why we've introduced new assets into the theater to say we need more capability to tip the balance our direction in regard to the threat of what we can do. And that's where you get into discussions of, Carg Island and so forth of, can we take something away from you that's vitally important to you that causes you to say, maybe this isn't the road we want to go down.
Do you believe, Secretary Scott Bessent told Fox News the U.S. is going to retake the control of Hormuz, ensuring the safe navigation. President Trump has threatened to take Iran's oil. Is that bluster, or do you believe it?
I hope it's doable. I mean, I think that's the question that we're all sitting around watching and saying, okay, you have more tools in your kit bag now. You have more capacity and capability to influence Iranians' desire to come to negotiation. This is not the first time the Straits of Hormuz have been at issue. It's not the first time we've been at odds, not just us, but the world at odds with Iran regarding shipping lanes of the Straits of Hormuz. Mm-hmm. You can go back to them laying mines. You can go back. This is the first time it's gotten into this much threat of shooting. And of course, at the end of the day, there's the threat of shooting and sinking ships, but there's a large threat of the cost because of the cost of insurance and the ability for nobody would afford to go through these type of passages, whether it's Bab el-Mandeb Strait or Straits of Hormuz, because insurance costs just go through the ceiling.
General Robinson, one of the things, too, that I think about is what's life after? Maybe I'm optimistic that that'll happen sooner rather than later, and you can weigh in on your time frame. But I do think about, is this still, we've had folks say it's an Iran that is going to be even more hell-bent on making sure it has nuclear capabilities when it comes to military weapons. And so I just wonder, are we creating an enemy that is going to be even more difficult going forward, and it may take a few years for their rebuild? Or are we helping to create a Middle East with all of our allies in that region that's more positive going forward? Is that even, I'm just not quite sure which way this goes.
In my opinion, the results of what's happened over the last month has created more unity among not just Middle East leadership, but Middle East population than we've had in the past. I think it was a strategic error on Iran's part, though they didn't really have a choice. I think they had preset targets, when the Ayatollah was taken out and the communication network went silent and the C2 architecture was dismantled for a while, they immediately turned to their in the box, these are the targets we're supposed to attack, and they attacked them. Mm-hmm. But a lot of those were targets that were not at government institutions, but at commercial institutions in their neighboring countries, which I believe played to our hand in regard to a more unified Middle Eastern population saying, wow, this Persian Iran really is a threat that is bigger than what we've even imagined in the past. So I think in that regard, it's improved the status of the Middle East and our relationship. Going to what you're talking about, have we really been able to knock down Iran's nuclear capability or capacity in regard to their development? Well, we certainly have set it back. I don't think we know yet just how far back we've set it, and I don't think we've played every card in the deck yet in how we would set that back.
What's an example of a card that you think we? What's an example of a card you think we still have?
I don't know that I would want to speculate on that. I'm not sure that would be helpful. I think the point is that both we, Israel, and now the Middle East, more than ever before, are saying this Iranian nation that we're looking at, this supreme leadership authority, is as unhelpful as we've ever had it. Therefore, how do we transition that to something that's more helpful?
So before we wrap up, I'd love to get your thoughts because President Xi is inviting the leader of Taiwan's largest opposition party to visit China for the first time in a decade, setting up a potential 1 month or meeting 1 month ahead of President Trump's scheduled summit in Beijing. It's just kind of interesting. You just watch kind of the jockeying that's going on around the world. Just interesting. Made us think about, with all that's going on, do you believe that the U.S. is sending messages to Russia and maybe to China, especially in terms of their military might and what they are willing to do?
I think it's a fascinating thing that's going to develop. I really don't know how that's going to play out. I don't see Taiwan abdicating to China's demands. I don't think Xi will have any leverage to cause Taiwan to say, okay, we're going to be different. I think Taiwan is not looking for a fight with China, but Taiwan absolutely is looking to have the maximum ability to defend the straits and defend themselves from the cross-strait attack.
And do you think, just 30 seconds, that the U.S. is willing to go to war to support Taiwan against China? Just quickly.
I think the U.S. is willing for Taiwan to go to war to take that option away from China, and would love to be part of facilitating Taiwan's capability and capacity to do that. I don't know that we're looking to be involved.
Yeah.
But the entire Pacific Rim, has a lot at stake here.
Right.
And really, the worst scenario is China starting a war against Taiwan.
Always appreciate our time with you. Major General Mastin Robison, Academy Security's Geopolitical Intelligence Group member.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Now to a view on today's global financial markets.
Yeah, and we want to get into how the Hormuz situation is mutating from a military war to an economic war through one key weapon. We're talking about global energy inflation. It's something we continue to highlight here, but so too does our next guest. With us is Florian Ielpo. He is head of macro at Lombard Odier Investment Managers, typically based in Geneva, but here in New York. Lucky for us on this Monday. Welcome, welcome. Nice to have you here.
Thanks for having me.
There's so much to get to, and I want to get into your thinking about how this can mutate from a military war to an economic war. But I do want to ask you, from your vantage point, I think we report on the war. There's certainly a U.S. perspective, or maybe through our lens. But I'm just curious, from when you're in Geneva, what are the conversations you folks are having around this war and the implications, short and longer term?
From our perspective, the first thing we think of course, is the human cost of this situation. Okay, and then we have discussion with our clients on what to do about the ongoing energy shock to protect their portfolio, to protect their savings, to protect their pensions. Okay, the key message we came up with is that you need to make a very big difference between the source of your energy inflation. Is it coming from demand or is it coming from supply? And the kind of things you need to deploy in your portfolio is clearly not the same. Mm-hmm. Demand, well, you'll see an answer from your central bank trying to tame demand so that to normalize inflation. Supply, usually it's just frictions. So normally your central bank should be rather dismissive with it, saying it's friction, it's temporary, you just need to wait and I'll hold my rates unchanged, which is a very different type of situation. If it's coming from commodities, then it's probably an interesting asset to hold in your portfolio. Holding a direct exposure to, say, inflation linkers could be interesting. And rates volatility in that situation is very interesting.
So interesting in that it's hard to make the call right now, or your expectation is that global central banks will have to keep rates higher because we're going to have some kind of floor on our energy prices just because there is some destruction that is going to take time to reboot, particularly for European markets, Asian markets who are more exposed perhaps.
True. Now, let's think of the Gulf War. I think it's an interesting example.
Yeah.
Right. It lasts for about 6 months with the peak in oil prices and the global peak in commodities and then the normalization. Okay. The US were actually exiting from a recession back then. And this spike in oil did not deteriorate the global economic environment in which the US were or Europe. Okay. One thing we've learned from last year is that if it doesn't bring you to a recession, there's no case for shorting the market. It's just a future entry point for holding more equities in the future. For now, we're in this wait-and-see situation.
You said for now. Is there an idea that this could bring the U.S. or other countries to recession this year if prices remain elevated for some time?
Our best case scenario is when you double up energy prices, which is a significant shock, okay, that the average size of any energy crisis we've seen so far, when something like that happens, it chops off about 1 to 1.5% of your GDP. In the US, just think of the current AI investment situation. This would more than offset already that shock. So our base case is really not a recession this year for the US or for Europe either.
We should say Brent, Carol, up 83% this year. WTI, the U.S. benchmark, up 80% this year.
Yeah, I also just want to, I'm watching headlines and they, are constantly coming connected to the war, the corporate space. But we've got from CNBC, JetBlue Airways raising bag fees, and this is because of the fuel price hike. And so we're seeing certainly an impact in the share price. Let me just pull it up on my Bloomberg, and you've got shares of JetBlue. They've been down pretty much throughout the day, and there's a lot more going on with this airline fundamentally as well, but it's down about 1.8%. So in terms of strategy, are you advising clients to kind of sit tight at this moment?
Yeah, that's pretty
Or
much.
is it an opportunity to maybe, pick up assets or various asset classes because they've been depressed a little bit at a lower price?
There's a matter of what the market is already anticipating in terms of scenario. Now, if I can just step back, the way we think of investing is 40, 40, 20. Okay, we say there are 3 kinds of periods for investing: improving growth, 40% of the time; deteriorating growth, 40% of the time; and 20% of the time, which we often forget about, is inflation.
Yeah.
And we are precisely in this kind of shock. So when you create your portfolio for the longer run, just make sure you have enough hedges against inflation and against both kinds of shocks, meaning demand-driven, supply-driven.
But that 40-40-20 you can stick to at this point in this environment where we are on this Monday, March 30th, you can still keep that percentage portfolio allocation.
Especially with the level of valuations we've seen. Think of that. If you look at the break-even market, so the inflation expected within the next 12 months by market, there's a surge by 1.3% of expected inflation by year-end, which is not the scenario, dominating scenario for economists. Quite the opposite. They see 30 basis points.
Yeah.
So markets are already overpricing what economists are anticipating at that moment. So there's a balance to be reached between what's priced in, what's not priced in. We see momentum in the commodity market. It's interesting. We see momentum in the volatility of bonds, and you can monetize that very easily, actually.
Yeah.
The war and the energy crisis, as a result of the war over the last month plus, certainly a focus for investors. Separate from that, I would say the other big theme for investors, at least in the last few months, the last couple of years, would be AI and the effect on productivity, the effect on the economy, and the effect on traditional software equities. I'm just wondering how you're thinking about AI and the effect on productivity and the effect on the economy.
There are two elements that comes to mind. The first one is an economic element. If you remember, I remember part of the late 90s. Back then, we had this surge in productivity, which came along a moderation in prices. At that moment, at that point in time, it's a very important message. Looking forward to the next 12 to 24 months, which is the perspective of inflation. Productivity is an inflation killer, and that productivity boom is actually happening. Okay. First element to remember: your bondholders could be protected by that. The second element is when you buy a stock index, when you buy stocks, globally speaking, the thing you're buying is not investments, not capex. It's not the growth in the number of consumers they have. What you buy is their margin, their ability to deliver on margin, and those margins are guided by productivity. So there's a boom in productivity. Maybe the software sector is currently being a little bit, challenged, to say it nicely. We see very positive longer-term prospect in terms of margin generation. So thinking that now we're down 7% on your stocks, with a situation that should be momentarily something temporary. I'm sorry. At some point, we'll have a very interesting entry point, and we'll go back to that narrative. AI equals productivity.
25 seconds. So that margin improvement outweighs anything we might lose in terms of labors and workforce? Or you think that'll balance out?
Outweighs, clearly. If you
Just quickly, yeah.
Look at Europe, you do a correlation, you do a chart with population growth versus productivity, and you see that the leaders in productivity are those countries where the number of people are actually going down. It's a marvelous thing. When you have less people, you need to incorporate productivity. It's a very, very, very strong force.
Which is, go around the world in a lot of the developed or major economies, right? You do see less people. Florian, so great to have you in town. Thank you so much. Florian Yelpo, he is head of macro at Lombard ODA Investment Managers, joining us here in New York.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, building a next-generation nuclear reactor, it's a long and slow process. It involves private companies working with government regulators. And that's exactly what's going on today. The NRC, it's the Nuclear Regulatory Commission. It's updating its rules so they work for newer types of nuclear reactors, not just the old ones. And I imagine James Walker would say, it's about time, or this is a long time coming. He's CEO of Nano Nuclear Energy, Carol. It's a $1 billion market cap nuclear energy company. It's working on small modular reactors. Shares down about 20% so far this year.
James, so good to have you back with Tim and myself. So how do you guys get closer to building and deploying something real? How does this become a reality?
It's a good question, because I think there's probably a great big filter process between companies that love the idea of one day doing it and actually going forward with it. What I can say about us, what very nice thing I can say about us is that we're about to finish our construction permit application to the NRC. And I think that will make us only one of 5 commercial companies that have put in for a construction permit to actually build one of these things. So it's almost like a handful of companies that are really taking this forward with the NRC to really build one of these systems. This is how we want to do it. We want to build it full scale, demonstrate it works, work out the kinks of how this thing gets constructed, and then that system that'll be fully completed, constructed, power outputting, licensed in 2030. After that, we want to mass manufacture those systems and then just start, deploying them as far away across the country as we can, and internationally too.
Hey, got to ask you, you said demonstrate that it works. Do we not know that it works yet?
Yeah, you're right. I should be careful with my language, because we know it works. Like, the thing is, we're using a high-temperature gas reactor. High-temperature gas reactors have been used for decades across many different countries. I think the only real novel thing that is happening now is that it's old tech and it's being paired with new fuel, like TRISO fuel. And the reason why that's happening, and most of the leaders in the industry are utilizing that advanced new fuel type, is because it essentially gives the fuel its own containment system. So it eliminates the worst accident scenarios that might be possible with like a big conventional reactor, like meltdown, that kind of thing. So it is working tech. We know it works. It's just being paired with new fuel.
How can it eliminate it 100%? Like, nothing's going to be 100%, right? Accidents happen.
Well,
we know that, the reality.
Well, the thing is, I'm always reluctant to say 100%, but the truth is that, like, if you take our reactor as an example, the operating temperature of this thing is sort of 650 degrees Celsius. But the melting temperature of the fuel is almost 2000 degrees or 1800 degrees. There's no way for the fuel to really even get that high. And this is the reason why this fuel is being utilized. Like 3 Mile Island, when people think of that, you got a fuel melt, or Fukushima, you get a core melting because of depressurized system, coolant loss. But if the fuel is contained, then the biggest accident scenario does get eliminated. And you'd have to really break the laws of physics in our reactor to get to that kind of scenario.
Hey, James, one thing that Carol and I were talking about a little earlier is this idea that there are dozens of nuclear submarines that the U.S. has. And each one of these nuclear subs has what essentially is a nuclear reactor on it that powers it. Why can't we just take that technology and plop it next to a data center?
So I got my start in submarine reactors, and believe me, if that was possible, I know enough about them where I could kind of design them myself at this point, having worked on them for so many years. But it's very different. Like, they use a type of fuel that civilian companies are not allowed to use, highly enriched uranium. Like, it's enriched over that sort of 90% barrier. And really, as a commercial company, you're capped at about 20 or just below, like 19.75% enrichment. And so the type of reactor that goes into a submarine, you can't directly take that outside of the military without a complete redesign. And so it wouldn't...
Is that for national security purposes? You wouldn't want that in the wrong hands?
Yeah, so there's a lot of laws governing the handling of nuclear fuel, particularly around something like proliferation, because it's okay for the military to have highly enriched uranium, but for civilian companies to be handling that kind of enrichment, it's never been done before. So there are limits on what you can enrich up to as a civilian company. And if you suddenly have that enrichment barrier, then you need to make a more optimized design around that level of enrichment. And then that's where you get Nano's reactor.
So the layperson understanding this answer would the basic understanding is you can't have a material that is enriched high enough to be powerful enough to power something that small outside of a submarine or outside of Defense Department purposes.
Yeah, so it's really just that limit on what you're permitted to as a civilian.
Other than that, the design.
Well, if you gave me permission, I think if you gave any civilian company permission, then they would probably take the HEU, because they would mean all sorts of things. It would mean
HEU meaning highly enriched uranium. Okay.
Highly enriched uranium, so that 90% plus enriched stuff. Then you would have longer periods between refueling. You would have more powerful output. Sure, but I think the limits are sensible. I wouldn't go beyond actually what they permit for currently, that 20%. I think that's a perfectly reasonable limit. So you can make a very good civilian reactor, because the fuel that you need to go into the civilian reactors is sufficient for what we need. And these reactors that, say, Nano will be making, already the enrichment levels will be higher than the conventional big sort of Homer Simpson nuclear power plant, a bit higher enrichment than those. But like, that allows us to make them smaller and more compact, and like that extra sort of power density.
I do love when Homer Simpson is a reference point, but we all get it. We all get it. James, one thing though, going back to what Tim was talking about in terms of naval reactors and naval vessels, I'm just wondering though, the safety element of what goes on in a naval a nuclear sub versus how we think about. I mean, obviously you have to be very, very safe. I mean, you're talking about folks on a submarine, a lot of them. Like, what have we learned about safety there that might be really useful in terms of nuclear reactors out on Earth? Because you do know, certainly the feeling in the United States, maybe not elsewhere around the globe, but there is certainly a pushback, and maybe with good reason because of some of the accidents we've seen.
You're right. I mean, it's always, as a nuclear engineer, obviously, I'm always going to sound quite bullish. Mm-hmm. But what the naval program demonstrates is that you can operate dozens of reactors for decades and still have no fatalities as a result. I mean, that's one good thing you can point to. Actually, in the United States in general, there's never been an accident that's resulted in a death from nuclear energy. Really, if you were to look at deaths per gigawatt hour, it's safer than everything. Safer than solar, safer than wind, everything. And like the new generation of nuclear with the new fuel that we were talking about, where it's encapsulated and it's contained, even safer still. So technically, by metrics, the safest form of energy ever devised, made safer still. So I really do believe that a lot of the fear around nuclear came out of the Cold War, because, there was the threat of nuclear Armageddon, and that has a psychological impact. And, it's got nothing to do with nuclear energy. It's a very different technology. A nuclear reactor can't blow up, as an example. It's not, basic things that people just don't know.
Well, they can melt down.
Yeah.
They can melt down, yes. But even then, Fukushima, 3 Mile Island, you have a cleanup operation.
Chernobyl.
No one's going to die. Chernobyl, yep. But like that's also it's not really a good example because that's a reactor where they said shut down all the safety systems, try and break the reactor under test conditions. No, that kind of thing is very weird. You would never get anything like that in any other country. So.
One thing that Carol constantly brings up is what you do with the nuclear waste. And you mentioned the highly enriched uranium that the military has access to, what you would not have access to and what civilians would not have access to. One of the benefits of that is you don't have to replace the fuel as frequently. But what about your fuel and when you replace it? Where does it go when it's spent?
So, the nice thing at the moment in the US is that spent interim storage facilities in Texas and New Mexico are being built. Really, like this is kind of a big thing because ultimately, when you take the fuel out of a reactor and you call it used fuel, most of that fuel is actually fresh. Like the burn up of the actual good fuel in a reactor over the lifetime of that fuel cycle is maybe like 3, 4, 5%, something in that region, which means that like 95% of that fuel could be taken out theoretically and put into a new reactor form. So if you were to take all of the nuclear waste, really spent fuel in the United States, you could run the country for hundreds of years on just the spent fuel.
But why don't we do that? What's the cost of doing that?
Well, the reason why we don't do that is the US currently doesn't permit to do that. But if they change the rules one day and allow companies to reprocess that spent fuel.
But why don't we let them do that? If it makes such sense.
It's the same as that HEU reason, is that there's a proliferation concerns around it. So they don't allow for reprocessing, but one day they probably will allow for it. And then all of that spent fuel that gets put into storage, we can take back out. And I can tell you, Nano would love for that one day to happen because that means all of our spent fuel cores, all of that sort of stuff, we could go get that fuel back out. It'd be essentially almost free fuel that we could build umpteen generations of reactors with. So.
No, it's interesting. And I think, the problem is bad actors, they're out there. Yep. So we've got to be super careful. James, thank you so much. Really fun to touch base. James Walker, CEO of Nano Nuclear Energy. It's a $1 billion market cap nuclear energy company joining us on this Monday.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, everybody, we've got just about 19 minutes to go until we wrap up the trade on this Monday. Holiday-shortened trading week, as you know. It is Good Friday on this coming Friday. And of course, the markets are closed. Having said that, we do get a jobs report, so it's going to be interesting. Our team here certainly on it as that news breaks and crosses the Bloomberg at 8:30 a.m. Wall Street time on Friday. Having said that, today, right now, we are just coming off our lows of this session, still down 1% on the NASDAQ 100, and we're down about just shy of 0.6% on the S&P 500. So just coming off our worst levels of the session, but a bit of a risk-off trade. But having said that, dig inside the S&P 500, and you've got almost an even split between winners and losers, gainers and decliners in today's trade, Tim.
Well, let's see what Rob Hayworth has to say about it. He's Senior Investment Strategy Director at U.S. Bank Asset Management, joins us from Seattle. Rob, good to have you on the program. Down 0.6% on the S&P 500. It follows declines from last week. It looks like March is going to be the worst month in years for the S&P 500. Have your clients started to call yet? Are they having questions yet?
Absolutely, they have questions, and I know it has to do with how long is this going to last, and where should we hide, right? And I think that's the challenging. I'm sorry.
What do you tell them?
It's been challenging because there hasn't really been any place to hide. The one place we liked to start the month that has actually worked out for us a little bit is global infrastructure, with master limited partnerships in that component doing fairly well. But otherwise, unless you owned energy this quarter, there's not been a lot of places to hide.
How much would you suggest to a client to shift or change around their portfolio so far this year and kind of almost in a reactionary move? Or, do you feel confident that there are some longer term trend plays out there that you can kind of make the bet on right now?
Yeah, no, it's a great point. I think as we entered, really the economic outlook and the economic backdrop has been fairly constructive, especially here for the U.S. And I think as long as really, and frankly, it's the closure of the Strait of Hormuz, as long as that doesn't go on for too much longer, say longer than another month, this is an economy where both the consumer and businesses are looking really resilient. And as we look through in the longer term, artificial intelligence remains a major play, and the U.S. economy and U.S. stocks should continue to do very well. I think the question for us as we think about the damage that's being done to the global energy complex over the next couple of weeks is what does that do to energy prices and who does that hurt? And I think the epicenter of that right now is more Europe and Asia, those major oil importers, rather than an oil exporting and an energy exporting economy like we have in the U.S.
So I before we get to the AI trade, which I want to get to, I just want to sort of tie things up here. And if we think about it, your view, as long as the Strait of Hormuz does not stay closed for another month, then we should be in okay shape, and at least consumers should be able to absorb this. What happens if that's not the case? If when the Strait of Hormuz does open again, there is not $60 a barrel oil? What if it's $85 a barrel?
Well, and certainly, right, you look at the futures market curve. I mean, the futures market is telling us we're going to have $70 barrel oil for the next year or so. Yep. So I think there is a bit of a cost to this economy, and it's going to dampen the consumer a little bit. But as long as we don't see jobless claims tick higher, meaning people have jobs, and as long as we don't see that a faltering in retail sales, that people are really adjusting what they're doing, I think we'll survive, right? And I think that's the thing for a solid equity market here. We just need decent U.S. growth, not great U.S. growth. Meaning, if we can hang around here at this 2% average level, maybe it's 1.5, maybe it's 2.5, wherever we end up, the market will generally be okay, even though it's a little painful for many consumers.
So do you think markets are at all being complacent? And I ask that, knowing the moves that we've seen, certainly down in the S&P 500, the NASDAQ 100. Mag 7 is down 16% year to date, down about 17% from the high back in late October. So we have certainly seen, corrections, maybe even more so when you look at individual names or certain sectors. But having said that, is there some complacency where an environment with so much uncertainty, or whether or not these energy prices create higher inflation, and global central banks that are either leaving rates as is or even raising them because of concerns about inflation, that, you add that all up and it creates kind of an uncomfortable environment?
Well, I think it's definitely uncomfortable. I think it's not a complacent market as much as it is a patient market. Right. Early in the year, we were reacting to fears that AI was going to lead to job losses and disrupt software business models. So that was the early hit to this market. We saw investors rotating because we still saw good economic growth. So we saw them rotate into small cap. We saw them rotate into the cyclical sectors. And now they're wondering when this is over, because the president has certainly talked a couple of times about being very close to the end of this conflict and close to reopening the Strait of Hormuz. And with it being that short, right, investors came in constructive and they're looking to get constructive. I think today's action, as we start to flirt with a 10% peak to trough kind of decline in the S&P 500, indicates there is some nervousness out there that this is taking much longer than it should as we start to touch correction territory on the S&P 500. So I don't think the market is complacent. They've just been hopeful that we're not disrupting the positive underlying fundamentals behind this market.
We're touching correction territory. We're not in there yet. On the NASDAQ 100, we are. Buying opportunity, though, for you?
I think this still hinges on the Strait of Hormuz. I think as once that gets reopened, I think we'd say yes, as long as the data is holding in, which it looks like it is. And of course, as you teased earlier, Friday jobs report is going to be very important in telling us a bit of that story, because that is the heart of what is driving consumer behavior here in the U.S. So I think if the consumer's okay, yes, it becomes a buying opportunity, but we need a little more evidence. And really it is hinging on that binary event of getting oil out of that strait.
New money, someone has some new money to put to work in this environment. Where would you put it?
Well, I mean, certainly, as Tim highlighted, stocks are certainly cheaper. It's something to start working your way into. We'd say there's an opportunity to manage your risk by owning some global infrastructure, which is a heavy utilities component. There's still that drive coming from artificial intelligence, the energy demand from that investment cycle that is going to help utilities along with the sector writ large. On the fixed income side, I think the great news is you're getting fabulous yield opportunities that you haven't seen in a decade. We would look to things with a little more protection behind them, like structured credit, non-agency residential mortgage-backed securities, things that are not connected to the business cycle, like reinsurance or catastrophe bonds, where you're still getting very attractive yields. I think there are places to start working in this market to build your diversification and still get invested in what is a very uncertain time.
Rob, thanks so much. Be well. Rob Hayworth, he's Senior Investment Strategy Director at U.S. Bank Asset Management, joining us here on Bloomberg Businessweek.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.